Good evening, everybody, and welcome to Wealth in the Word, brought to you by pureflix.com. I'm Mike Storms, here with our financial expert, 40-year CPA, author of 2 Christian financial best-selling books, Bob Katz. Bob, how you doing this evening?
Doing great, Mike. How are you?
Doing great, sir. Good to see you.
Good to see you. Mike, let me do as I always do, open up with a prayer, and then we'll jump right into this subject. Lord, we just thank you for an opportunity to minister tonight. We, as always, ask that you just speak through us to our audience, and that our words are wisdom and a blessing to them. And we ask this in Jesus' name and give you all the glory. So, Mike, I see we have an interesting and a confusing topic for tonight.
Right, Bob. Tonight, we're going to be talking about life insurance. Who needs it? What are the differences? It's a confusing subject for a lot of people, and subject that brings up a lot of fear for folks.
Yeah. Well, let's start at the beginning. It's misnamed. It neither ensures that you are going to live, nor does it pay you for living. The truth is, it's death insurance, and it only is a benefit when you're cooperative enough to die. But of course, if they called it death insurance, it would be hard to sell. And when it comes to life insurance, selling is absolutely the name of the game.
Yes, sir. So what exactly is life insurance in its simplest form for a definition, Bob?
Okay, Mike, it's just people pooling their money to reduce a risk. And the best example I can give is homeowners insurance. Nobody thinks of homeowners insurance as an investment. What they think is, if my house burns down, I can't afford to replace it on my own. Very few of us can. So we pool our money against that risk so that if one person's house burns down, then the pool pays to rebuild his house. There's a slight chance of this risk happening. But if it does, we couldn't handle it on our own. So we pool our funds with other people's. Same thing with life insurance. There's a slight chance of you dying prematurely, but we're trying to mitigate the risk to people dependent on you if you do.
So the purpose of life insurance, Bob, just to reiterate what you said, the purpose is to reduce risk.
Yeah. Like I said, there's a small chance you're going to die prematurely. And there may be people dependent on you financially who would be very harmed if you did die prematurely. So you're pooling your money with others to pay off in that instance to help take care of people. It's not an investment. Auto insurance isn't an investment. Mortgage insurance, it's just a risk pool.
So how do I know, based on my life circumstances, based on my age, based on my responsibilities, how do I even know if I even need life insurance in my life?
Great question. The key word here is dependency. So if you're single, you're healthy, you've got a job, you don't need life insurance yet. And in fact, when you first get married, you may not need life insurance. If both partners work and would not be financially harmed if one or the other passed away, you probably don't. Most people need to start looking at life insurance when a child comes along. Because, as I said, dependency. Now you've got someone who you need to support for many, many years who would be harmed if you were to die prematurely and that income stream dried up and went away.
So if I'm young and single, I don't need life insurance. And if I'm young and married with no kids or dependents, I might not need it either.
Very, very, very likely, yes. Despite what you may be told, if you don't have someone who's financially dependent upon you, there's a good chance you don't need life insurance.
Okay, so the next question after that is, okay, how much do I actually need? How do I calculate that number of how much life insurance I should buy, Bob?
Yeah, another excellent question that I get asked all the time. And if you ask 2 life insurance agents, and I don't mean to sound cynical, you're probably going to get 3 answers. Does that sound cynical? Look, one of the wonderful things about the internet is there's plenty of sites out there that will give you objective worksheets to calculate how much insurance you really need. One that comes to mind is USAA Educational Foundation. They have a worksheet. It's free. Anybody can go to their website. And it's the best I've seen that walks you through what you really need in terms of life insurance.
And folks that are watching tonight, if you need us to put that website in the comments. Just go ahead and comment, say, please put that website. I didn't get to write it down, and we'll put it there so you can just go get that free worksheet to calculate on your own with your family how much life insurance you need. Okay, so I have determined that I need life insurance, and I've determined the amount that I need. So what kind of life insurance do I get? There's plenty of different products out there that make it confusing, and I'm sure the insurance agents are going to be pushing certain products for certain reasons. So what kind of life insurance do I get?
Oh boy, here we go. This is where the disagreements really heat up. You are right, Mike. There's 1,000 products out there, but generally speaking, it's a bit of an oversimplification, but generally speaking, there's only two kinds of life insurance. There's term life insurance, and there's permanent, or sometimes it's called whole life insurance.
Okay, so what's the difference between term insurance in its purest form and regular whole life insurance?
Cost, for one thing. Term life insurance is pure insurance. And if you believe like I do, again, you're just insuring against a risk. You're not trying to invest through an insurance vehicle. Term insurance it just gives you what you need, especially when you're young, because it's very inexpensive. So it's insurance. You're just paying for insurance, and you're paying for a fixed term. So you might see 10-year, 15-year, 20-year terms. So the policy, you pay a fee or an insurance premium for 10, 15, 20 years. At the end of that time, the policy expires, and hopefully you've been a good steward. So now you don't need that. Your kids are out of the house. You've saved money, and you don't need that insurance. And that's the least expensive, and to me, the most practical way to protect your family during those growing years.
So the big question is then, which one is right for most people that are watching the show tonight?
Well, whole life, to me is not, for most of the people watching the show tonight, the permanent or whole life is not appropriate. The difference between term and whole life is whole life does not have a term, but it has a forced savings component, something that you usually hear the term cash surrender value. So they take your money, they buy the insurance, and then they take another part of that money and they put it away in a savings account, if you will. And it grows over time, and they'll show you projections on how wonderfully it grows. Again, I never look at life insurance as some sort of investment vehicle. It's insurance against a horrible event. That's all there is. So as a good steward, you shouldn't be made to save through an insurance vehicle.
So it's a protection, not an investment. In the early family years, it provides exactly what you need at a very reasonable price if you get it when you're young. And it's easy to shop for because it's just pure insurance. You can just go online and look at a bunch of different companies and get quotes from people and get your physical and get set up for it. And really, you can just lock it in for 30 or 40 years from the time you're 30 to 65, when you won't have dependents anymore and won't need it anymore.
Right. It's really that simple. And with the advent of the internet, it's very cost efficient way to protect your family now.
And so if I want to get it, term life insurance policy, I just go online, Google it, and then look for some companies, and I call it the rule of threes. Always get 3 estimates from your plumber, from your electrician, from your lawn guy, and from insurance companies, and go online and search some of the bigger, more nationally known companies that have good reputations and begin your inquiry process.
Right. Or you can go to an independent agent who hopefully will do the same thing. Find 3 term life insurance companies and actually give you wise counsel on which one's the best. The internet to me is the way to go. Let me say this though, it's the old firm handshake and a big smile. I don't know how many people I've counseled over the years who made a bad investment, and they say, well, he was so nice and he had a firm handshake. If you die, it doesn't matter how nice the insurance agent was, how good their handshake was, or how good their spiel was. What you care about the company that wrote the policy. So you need to find that combination on the internet of high-rated companies and cost-effective premium. That is the most. I'm not against going through an agent, but he should do the same thing on your behalf. What he's looking for, again, is a high-rated company that will be there to pay off if you need it at a reasonable cost. That's the keys to term life insurance, not the agent.
Okay, so it sounds like if you go the term insurance rate, you're going to solve a big problem in your life, protect your loved ones, and the process isn't very simple. So, Bob, just run through those steps for our viewers real quick, please.
First of all, determine if you need insurance at all. If you do, the next step is to find an objective worksheet that tells you how much you need. And then the last step is to go to either an agent who will put you first or get on the internet and find that best combination of highly rated insurance company that writes term insurance at a reasonable cost and purchase it, and you're done.
And so what are some of the basic cost parameters for somebody getting insurance in their 30s and 40s? What are they going to typically pay? What are the variables involved?
Well, it depends on a lot of things. It depends on your health. It depends how many years out you want the term to be. It is a fraction. Term life will wind up being it depends on your health, if you're a smoker, et cetera, et cetera, et cetera. So there's a whole list of questions. But once you've answered the questions, especially on the internet, like selectquote.com, they'll take that information and shoot it out to several insurance companies, and you'll be surprised how similar the quotes are that you get.
So, Bob, we're getting towards the end of our time tonight on the insurance episode. So what other kinds of insurances are some of our viewers? I know I wasn't thinking about it at times, and then you brought it to my attention many years ago. What are some other insurances that they should be considering or thinking about that you could speak about briefly?
We'll touch disability insurance. Generally, this is offered by your employer. So there's short-term and long-term group disability insurance. Your employer will generally give you a base and then offer if you want to layer something upon that. Certainly you want to look at that because statistically, people are more likely to be disabled than they are to die prematurely. And being disabled is much worse than dying prematurely because not only does your income stop, but generally your expenses will go up because of medical expenses. In best case, they remain the same. So disability insurance is something certainly to look at and think about. Long-term. Oh, go ahead, Mike. I'm sorry.
What's the best way for our viewers to protect themselves financially against unexpected, unforeseen disability event in their life? What's the best way to do that?
Well, I think buying a custom group policy is very expensive. But again, take advantage of group policies. Insure affinity groups. If you're a pilot, Airline Pilots Association will offer group insurance, disability insurance. Any credit unions sometimes will. Look at the affinity groups or what your employer offers, and don't just say, I don't need that. There's a good chance you do need it, and also it's very inexpensive. So take a look at short and long-term disability, and make, don't just, at least take a look at it and analyze it before you just say, I don't need that, because you may need it.
Right. And as you said, short-term disability, I got a policy for myself. It's very, very inexpensive. It's not that bad. So what else? You were starting to talk about another kind of insurance.
Yeah, long-term care. And that's really a topic. Disability and long-term care are a topic for another day. But with people living as long as they're living now, and with Alzheimer's on the rise, because I think partially because of that, long-term care insurance has a place in people's insurance portfolio, if you will. It can be pricey. It's complex. And as I said, it's a subject for another day. But the good steward, and this is, again, our show's about stewardship, is at least going to look at things like disability insurance and long-term care insurance and see if it fits into their needs.
Well, that's all the time we have tonight for our show. I want to thank everybody for watching. We really want to hear from you. So please, comment, share, let us know how we can help and serve you. And for pureflix.com, for Wealth in the Word, and for Bob Katz and myself, good night. And everyone that's a Pure Flix customer, as well as those on the trial, please click on the link below so you can download a free chapter of Bob's book, Money Came by the House the other day. Thanks again, everybody. Good night.
Good night, Mike.